Good morning, everyone. Welcome to Pre-Market News and Views by In the Money Stocks. Today is Wednesday, June 26th, 2013. Let's jump right into the charts. We are going to start off with the usual S&P 500 E-mini futures. See that the futures are flying high today. They're up about 9 points at the moment, right to around 1590 per contract. We just got a little bit of economic data just released a minute ago. It looks like gross domestic product, GDP in the United States, rose by 1.8% in the first quarter. Not a very good number, but it may be good for the stock market because they may say, hey, maybe there will be more quantitative easing. But either way you slice it or dice it, the bond market will tell us whether or not there will be more quantitative easing or not. Recently, the bond market has fallen and yields have risen, and that's really the dictator of the market, so to speak, at this time. Right now, good little pop in the market from an oversold condition. Futures are up about 9 points as we speak. There are a few things to cover in this market. One is gold. We're going to jump right into that one quickly. Gold is getting hammered today, down about 3.25%. It was even a little bit lower. You can take a look at the GLD this morning, which is a good proxy for gold. That traded below the 120 level. In fact, it traded as low, I believe, as 118.32. Now rebounding up a little bit, trading around the 120.49 level. Traders should keep an eye on the U.S. dollar index today. That will tell you a lot with gold. You'll see that the U.S. dollar index really just plummeted after that GDP report, and that is certainly helping gold shares to make a little bit of a move off the lows. But nonetheless, gold is down quite a bit here, so to speak. Is it a blow-off sell, or is it a sell-off bottom or something like that? It's always possible. But again, we'll have to look at the charts and see what the charts are telling us right now. Gold is still in an ugly position, although it has come off the lows pretty sharply, and that's simply because the U.S. dollar index has sold off from its morning highs. So you can see the dollar was trading up around 83.15. Now the dollar is coming down pretty sharply, and that is affecting the action in gold. But nonetheless, gold right now down about 3%, and it was lower earlier. Looking at oil today, oil is slightly lower. We're looking at a slightly lower oil price. Light sweet crude, which is the crude we use in the United States, that's down about 20 cents to $95.12 a barrel. So we shouldn't see all that much in the USO today, and we're not really seeing it. It's right around 33.71 at the moment. So we can't make too much out of that. We'll see if this GDP news will have much of an effect on the market. I don't really think so. I think the market will start to view it as, the pundits will come out and the talking heads will say, hey, this is just a quarter, and next quarter is going to be better. But just think about it. All that quantitative easing for 1.8% growth, that's really not very good, but it is what it is. All right, let's take a look here at a few different things that we want to talk about. One is the Asian markets last night, and if you take a look at the Asian markets last night, we really had a mixed bag of tricks. The Nikkei 225 finished decently lower. You can take a look here for yourself. Nikkei 225, I believe, finished down about a little over 1%. But nonetheless, you're not getting any great action out of Japan recently. Really, just more sideways range bound after that abrupt, quick sell-off that we had. It was about 3,000 points on the Nikkei, and then we're really just trading around. But this could be building a bearish base to ultimately go lower, so traders want to be aware of that. Last night, the important Shanghai index finished basically flat. It was slightly lower last night. It was down about 0.4%. But you could see another night where it was down and then it rallied back up, and we're still sitting at that 1951. I know a lot of people are looking at that big bottoming tail, salivating and saying that's a great tail. But here's more to it. If you take a look at the weekly chart, what you're going to see is that you're basically still at double bottom. And depending on the week, you may even close below making a new weekly low. So I think traders still want to be careful and still be a little bit cautious when it comes to the Shanghai, at least at the moment. I'm not saying you can't get a near-term bounce, but what I am saying is that it's not out of the woods by any stretch, and the Shanghai is still a very, very weak index in a pretty severe downtrend. Looking over at the Asian markets, again, you did have a pretty solid move in the Hong Kong market. And Hang Seng was up, I believe, 2.4%. So the Hang Seng, pretty good move. I know most people confuse that and say it's China, but China does own Hong Kong, but the markets are somewhat different. You can see a pretty solid move in the Hang Seng last night. So we'll have to see how that all shakes out and plays out going forward. And then you have the Straits Times, which is the Singapore Straits Times, and you can see that kind of was steady last night. We're not going to make too much out of that one today, but the Singapore Straits Times finishing up about 0.4%. Now, yields on the 10-year note, that's what's going to be very, very important. Anybody looking at the 10-year Treasury, you'll see that yields are down to 2.53%. That is certainly going to help the stock market. If yields start to move higher on the 10-year note, then problems will come into play. What traders can do is look at the IEF. The IEF is a very, very good equity. You can even look at that in the pre-market. And if this falls, the stock market falls. If this moves up, generally the stock market will move up. At some point in time, that relationship will not work, but it is working pretty nicely at this time. So I think you may want to look at it at the moment because it is pretty effective from what I can tell. Remember, this is the 7 to 10 year. That's really the one note that has the most effect on the U.S. stock market. Now, there will be a 5-year auction, I believe, 5-year note auction, I believe, at 1 o'clock today. So we'll see if that does have any effect on the overall stock market. I'm not sure that it will, but it could, and we'll just see how that plays out. Now, you do have a lot of Fed governors speaking today. I believe you're going to have the Richmond Fed President, Jeffrey Lacker, speaking. Also, Dallas Fed President Richard Fisher. I'm expecting conflicting stories from those two. So, again, you could have some added volatility in here. Earlier today, I think CNBC had a Fed governor on from Minnesota, Coca Lakota. And you know, you just have to take it one step at a time. There's going to be a lot of Fed speak out here trying to keep this market up in the near term. So take it one step at a time, 1 minute at a time, and we'll see how it plays out. The big news today, obviously, was the GDP for the United States. That came in at 1.8%, much lower than the expected 2.4%. But who really cares about GDP? Nobody really cares. They only care about money printing and how much money is being pumped into the system. That's really the end result. I don't know if there's any economic news for today. I think that might have been it. But either way, just take it slow, and we'll see what these charts tell us. We will have a couple gap plays. They'll be posted up in the chat room right around 9 o'clock. And we'll see how this market plays out going forward. With that said, everybody, I want to wish you all a great trading day, and we'll see you on the charts. Take care now.